All right. Good evening, everyone. We are live here tonight on the Vibe, the Block, and the Street. Tonight's episode is going to be we're going to be talking about the changes in the healthcare industry as far as rates, what the laws are as far as coverages for you. I have some very astute gentlemen here who have been in the business for quite a while, with over 55 combined years in the business. First of all, I want to introduce a very lifelong friend, Randy Phillip. Randy is the principal at the Washington Insurance Group. He's been in the business for 35 years. The second astute gentleman here is also a ace in my life and a good friend. He is Eric Jones. Eric Jones has been in the business for 23 years. He's also the principal at Mother's Care Financial Group. And we're going to talk a little bit. Randy, why don't you start us off about what do you think the main components are when it comes to changing in healthcare laws right now?
Yeah, so for the last since 2012, I've really been focusing on Medicare. I previously did group health insurance, but then switched over to Medicare. Some of the changes that you're seeing as a result of from Biden administration is the shrinking of the prescription drug out of pocket expenses for folks that are on a Medicare. So prior to 24, your senior citizens they had four parts of their prescription experience. So deductible, then copays, then the donut hole, and then the catastrophic. And so over time, the government was working to shrink that donut hole, and that's the part where most of your senior citizens were having big issues in that they're paying big percentages of the cost of their prescriptions. So the coverage that started in 25 has shrunk their out of pocket. So bottom line, what that means is once the retail cost of their prescriptions in one calendar year equals $2,000, they will no longer have any prescription expenses for the rest of that calendar year. So that's really helped a lot of senior citizens. So those folks that are on those inhalers that cost $400 or $500 an inhaler. Once the retail cost, so they'll have copays. Once that retail cost is $2,000, they don't have any more out of pocket expenses. So that's been one of the biggest drivers as it relates to health insurance costs. Now, to get that, they got to give up some other stuff. So you're seeing insurance carriers reducing benefits in other areas of Medicare, which means higher deductibles and higher copays. So that's really between that and the new administration talking about Medicare and reductions in, Medicaid and reductions in Medicare. That's some of the big things that are going on right now in our industry.
So, Eric, what do you think has been the challenge that you've seen as far as getting seniors enrolled and trying to explain some of maybe gaps that might be in insurance coverage as it pertains to health and age and so forth?
Well, I think it's really when you go ahead and you come down to it, it's the educational piece all the way around. And what I mean by that is you got a lot of different levers going on within the market. You have carriers pulling out of markets. Why? Because when you go ahead and you talk about sort of the risk and the claims, they're high. And when you go ahead and you're not like anything else, you're running a business. When you have expenses that are higher than the revenues that you're receiving, guess what? It's going to go ahead and cause a problem. They've got to go ahead and be solvent in order for that plan to go ahead and stay in the market, especially if we're talking about Part C of Medicare being the Medicare Advantage plan. That's privatizing your original Medicare to have a company to go ahead and take care of those benefits, whether it's your inpatient being Part A or whether it's your outpatient being Part B. The other piece that they're going to go ahead and start to see is, especially in certain states that have what we call the birthday rule, much like Virginia. All of a sudden, The birthday rule allows for individuals based on their date of birth for that month and then the month going forward to enroll in look at a Medicare supplement plan and ultimately enroll in that same plan, being able to reduce the price point. So what you're going to go ahead and find is once consumers become aware of that, there's going to go ahead and be some movement. But what the carriers are going to go ahead and do to be smart is they're going to go ahead and raise the price of those plans in order to compensate for the risk that they're absorbing, meaning some of the clients coming on that, maybe they frequent the hospital, the urgent care, maybe they're going through some sort of regimen. So, those dynamics are making the shift in benefits. Like 2026 is going to be a prime example. Traditionally, we get carriers to go ahead and be pretty stable in the benefit realm, really all the way around. But you're going to go ahead and see probably a shift we haven't seen, and I don't know. I'm probably dating myself at least a good, depending on the carrier. In some instances, 5 years, 10 years, but you're going to go ahead and see a shift where the benefits are being downgraded versus improved.
So, are there states, fellas, that are easier to process, or is this just the carrier itself? Like, are there states that are easier to do business in?
Yeah, I'll go ahead and then I'll throw it to Randy. You got two components depending on what we're talking about. You're talking about the Department of Insurance, which is state led, and then if we're going ahead and we're talking about the Department of Health and Human Services, the Center of Medicare and Medicaid Services reports, to them, that is Fed led. So, depending on what we're talking about, you're going to have two different entities, and at times those two entities aren't on the same page and working in concert, which can go ahead and create some dynamics for our consumers.
Yeah, there are states that are more insurance friendly, and Virginia had been one. And Maryland has that birthday rule. It has had it for a while, and you're seeing the cost of Medicare supplement plans increase. Maryland also has another rule, and I want to call it. I think it's called the Any Nations rule or something like that. And basically, what it says is an insurance carrier, and so I'm getting outside of Medicare, just an insurance carrier. If they go to a particular hospital and they say, we've got 10,000 members or 10,000 potential members, and we're gonna put you as an in-network provider and drive people to use your hospital facility, and maybe exclude some of the hospitals around you, so that drives people here. And so in exchange for that, we're looking for a discount, right? 10% discount. And in Virginia and in DC, a carrier would do that, and they would get some level of discount. And then, but in Maryland, it's Any Nations or something like that. I can't remember the name of it. But if I, with 10,000 people, get a 10% discount, and you come to that same hospital with 5 people, the hospital has to legally mandate give you the same discount with your 5 people as they give me with the 10,000 people. And so that throws off the carriers being able to make deals and to cut better deals and to give better rates, based on their volume of business. So that's one issue that's going on. The second issue is just nationally. You're seeing since COVID, there's higher utilization. So people were postponing operations. There's an aging population. And so you're seeing many carriers on the group health insurance side delivering 30, 40, sometimes even 50% rate increases for groups. And especially for groups that have a PPO, people that are on the least managed care. So you're seeing some constricting in the industry, where the industry is saying, look, we're going to really start aggressively forcing you into a tighter network because of our loss ratio.
And you know what? Let's expound on that too on the Medicare side too, Randy. You know why? Because when we talk about value-based care providers, and what you've seen the carriers go ahead and do is they traditionally go over to HMO plans. They get into partnerships, relationships with primary care providers, and basically they build a contract that says I tell you what, if you can go ahead and deliver these results, we'll go ahead and we'll pay you more based on what those outcomes are. But what they're doing in certain indices, they're in some instances they may not be delivering better care, and they may be withdrawing certain things that a customer may need, emergency room care. You know, they're incentivized to go ahead and take the customer away from the emergency room or urgent care and handle that themselves. Now, again, that can go ahead and wane depending on what particular value-based care provider that we're speaking with. Usually, some of the components that go ahead and drive that being a good outlet is the frequency in which they can go ahead and see the customer and the time that they go ahead and they spend with the customer, as well as some of the ancillary benefits that they may offer in house, whether it's dental coverage, vision, they may offer acupuncture, and they may be able to go ahead and get their prescriptions, especially if they're generic uh, at no or low cost.
So, is there such a plan? And Randy, I think I've talked to you about this before, where I could get everything if I'm willing to pay for it. Is there such a plan that I have this big net that I can use, that no matter what, I'm good? Is there such a
On
thing?
the Medicare side, if you had a Medicare supplement, that's going to give you your widest list of doctors that you can go to, and it's going to give you your most comprehensive or least out of pocket, depending on which plan level you purchase. So if you've got the dollars, if you're 65, you're a male, you're a non-smoker, it's $150, $160 with AARP, subject to be more expensive in Virginia shortly. Yeah, so then you can go to any doctor that has a contract to accept Medicare patients. If you're talking about individual insurance or group health insurance, sure, group health insurance, if you are the purchaser, not the employee, because if you're an employee, you get whatever your employer offers. You can purchase, a pretty rich plan that has a lowish out of pocket, low deductible, but I mean you're gonna pay out the wahoozy for it.
So all the three of us have parents that are seniors, right? And Eric, is there a way to devise a plan like home care? I find that I've had some friends and relatives, for that matter, that can only get health home care for so long. Is there a plan out there that says, so, hey, if I want my father or my uncle or my grandmother to get care um, Monday through Saturday, from let's say 7 in the morning to 7 in the evening. Is there such a plan? Regardless of how expensive it is, does it exist?
Well, usually the first place folks are starting, they're going with whether we're talking about original Medicare, Medicare supplement plan, being secondary to that, Medicare Advantage plan. They put parameters around that home health care piece. And the parameters go ahead and say, whether you're talking about your primary care, your physician, whether we're coming out of the hospital, that doctor has to prescribe, advise why you need home health care. And traditionally, on that home health care side, they're only going to go ahead and do it for a 2 or 4 hour stint, realistically at the max. And then it's up to the family. So I'll give you a prime example. My father's going through home health care piece. So they'll go ahead and they'll come in usually 3, 4 days a week. But again, it'll go ahead and be for that 2, 4 hour stint. If you need more than that, the family's either going to supplement that or you're going to go ahead and self pay on that piece. The other piece is, does somebody have Medicaid, which has a different criterion with regard to that home health care component. But it's truly about, for somebody, the continuity of care. That is such a big deal. And meaning, all that means is the communication from entity to entity. Okay, whether it's your primary care to your specialist to the hospital to the skilled nursing, rehabilitation, or home health care. If that piece is broken in any way, it's a problem. And most folks aren't ready for that break in that continuity because you're trying to go ahead and get the best outcome for your loved ones um, as possible. So it's just like if you go ahead and you go to a rehabilitation from the hospital, well, guess what? The hospital considers themselves done because that's not, in most instances, part of the hospital. If you try to get your way back into the hospital, usually that's going to be a tough goal because one, they probably have only so many slots, and those slots are really built for their internal folks, whether it's their primary care, whether it's their specialists trying to go ahead and get that home health care from them.
So, I mean, Randy, so is there is there a plan or something that I could devise to where um other than the out of pocket expense, is there an insurance package that exists to where I can say, all right, well, my father just came out of the hospital. He's going to be on the mend 21 days. Is there such an animal that I could construct beforehand to make sure that he gets that care that he needs? Is there a package out there? I mean, you don't have to, say, well, this company or that company if you unless you want to, but
Well,
is there an
there are a couple.
animal out there for it?
Yeah, a couple things. So first off, there's long-term care, and that's an area that so you think the government. So you've got Social Security and you've got Medicare. The third leg on that stool would be long-term care, and that's very limited benefits through Medicare. So like with my mom, so she can't do one of the I think it's 5 ADAs. Feed yourself, bath yourself, clothe yourself, da 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 da. So she's in a long-term care, what you might consider a nursing facility. So there was a time when you could buy very generous long-term care policies for a couple $1,000s a year or something like that. They were selling those policies back when you and I had hair.
Hey, don't forget me.
And actuarially, those companies, a lot of those companies went out of business because they weren't charging enough premium to support the cost of putting mom and dad into a long-term care facility, which it's easily ten to $12,000 a month for
Hmm.
a decent place.
Hmm.
So now there are long-term care policies I do not sell, from what I understand, that are now tied to life insurance policies, and you can get some level of some level of coverage for the long term. For the short term, when you're going through rehab, so let's say I've known of guys that dropped a hacksaw on their leg, and so they go into the hospital. The hospital fixed them up, and then the hospital sends them home, and then we'll send a nurse over to change out bandage. Or if the person is doing some level of progressing, they can put them in a rehab facility for a defined period of time. Typically it's if they're covered under Medicare, there's a set number of days that you'll get for rehab.
Yeah, 1 to 2 weeks.
But if you get to the point where you're not progressing, they put you out
Hmm. Hmm.
or charge you. You know.
Well, and the key component to your question is you said, if dad is say is in the hospital, okay, I'll tell you much like life insurance. If we're in the middle of it like that, your insurability isn't there. Why? Because you're in a set of circumstances which you're going to go ahead and use it. The only way that you can go ahead and really curtail that plan is you need to go ahead and have that foresight, that forethought to go ahead and buy that policy in advance of you being in a situation.
So
If you
to
don't
put a
in advance,
bow on this particular topic,
mm-hmm.
what do you think? I'd like each of you, maybe your answers will overlap, but I would like each of you as to talk about folks in our community for a second. What are the three things that you would like to see when you get a client out of our community you'd like to see them get? We'll start with you, Eric.
One, education.
Hmm.
Two, I want to make sure that the kids are involved. And three, I need to go ahead and make sure that we're sitting down and we're doing a thorough, what we call a needs analysis. That needs analysis that allows us to understand what they've got right now, what do they like about it, what do we need to add, who the decision makers are, summarize that, and then we make sure they understand the foundation of Medicare and then the pivot points, Medicare Advantage, Medicare supplement plans. Financial impact has something to go ahead and do with that. There's going to be some sacrifice either on the front end or the back end. So even if the parents can't go ahead and afford certain things, the kids need to be involved because you know what? Maybe they want to go ahead and pick it up versus to bear the burden of it on the back end of it.
Right.
Well, what I like to tell folks is some of the ancillary stuff that folks will go out and sell somebody, meaning on TV, radio, print, you'll go ahead and see folks' food card and other little stuff. But remember, we get insurance for the big stuff, not for the little stuff. Okay? Before me and Randy and our teams went ahead and met you, guess what you were eating?
Hmm.
I'll put this challenge to any agent out there that says, hey, you know what? Sit in front of somebody, and they said they wanted a food card for $50 or $100 that has a max amount of pocket on it for 93.50 or 92.50, and then you have better plans out there that has a max amount of pocket of $3,000, $4,000. That's a big difference. So if they have a tough year, are they willing to go ahead and pay that difference? I haven't got an answer to that, a yes to that answer yet.
Hmm.
So it's really trying to go ahead and make sure they get the best package based on what their set of circumstances, and there's a variety of things that go into that.
Randy, you have three things that you'd like to see.
Well, shoot, just fundamentally, I mean, save more than you spend. I mean, that's more for my people. Save more than you spend. Think about pushing generational wealth forward, and that's with life insurance. Tax-free, real life insurance policies, not 999.99. Um, and Yeah, I mean, just really be educated. There is a reason why other ethnic groups are ahead of us. Even if you subtract out the time we lost because of slavery and racism and all that, it's thinking about the future, saying, okay, I'm going to buy $100,000 policy, life insurance on myself, and that I will never see, but my kids will see, and I'm gonna learn them that not to take that policy and buy sneakers and cars, but to invest that and then push and then have them push a $200,000 policy forward to their kids or their generation. I mean, we just really need to we really need to catch up on we need to catch up before we're cut out.
So,
And yeah, well, and one last.
Eric, you and I had talked one night, and we were talking about. Talked. Someone had said if every black person was insured with life insurance,
Mm-hmm.
and this was a very bold statement that this person said, you would see police shootings literally disappear. And the reason why he said that because financial institutions run this game more than we think. So when we talk about these things, how does it how does it add up when we're sitting down on our kitchen table when we're like in our 20s with our significant other and we're talking about the future? How can we plan? What's the best way to plan at that point? And realize as our fortunes increase and our ability to earn increase, obviously there should be some adjustment to life insurance. But what's the best? Is it better to go ahead and do the whole life and not hang out at the lounge three times in a month, or do we because we're young and we're just going to go ahead and do the term? And what's the best approach long term when you're planning this?
Really the piece is what from an accountability stance and a consistency stance, which one are you going to go ahead and keep? Meaning we're not going to go ahead and lapse. A
Hmm.
lot of times when we're young and we don't have a whole lot and we have constraints on the budget, that term will go ahead and get us by until we start to go ahead and get our mind right.
Okay. Okay.
Okay.
Okay.
Once we start to go ahead and all of a sudden usually what happens when we start to have to, our priorities go ahead and change. We start to go ahead and deal with folks bigger, things bigger than ourselves. Kids come into the picture. Our mindset starts to go ahead and change. You get married, and now all of a sudden maybe our income goes ahead and changes too. Well, the conversation changes. So, I think initially we may have to start there for us to go ahead and get our sort of get our wherewithal with regard to understanding those priorities and being consistent with it. Then there's a pivot point with regard to that whole life and us looking at IULs and things of that nature that have some different components associated with them.
So, Eric, do you also deal in PNC?
No, no, no property and
Okay,
casualty.
because I guess, fellas, through your vast experience in this game, I found a lot of people just dealing with my father being in the business. Some of the things that he would say, he he would he did everything because he figured that most of the people that he would end up talking to would eventually be homeowners. And what
Hmm.
the scary thing that he found is with some homeowners are how underinsured they are.
Sure.
Like for instance, when they do buy the home, they don't adjust the life insurance um, um, uh, element of their protection package. And something happens to one of the spouses, they bought a $400,000 home, but they only have $150,000 of term insurance. And he says when he saw that, it was very disturbing. So, what is there a certain place where people can go to get educated about uh hey, I've got a couple of kids now, we bought a house this week, or how do I know where to, or how much do I need to increase my life insurance?
that that in and of itself, along with everything that we're speaking, is always the issue, because you're looking for good resources
Hmm.
that you can trust that'll go ahead and take you through those components. And that is the mission. Whether we go ahead and we're dealing with, I don't care whether it's church, whether it's community partners, that we cycle in and say, hey, you know what, here we are. We are the ones that can go ahead and take you through that, look through those components, and tell you based on where you're at, and being honest with you, honest to a fault. Where some other folks will go ahead and short sell you. You can only go ahead and afford this. Again, you're going to make the sacrifice on the front end and the back end. It's just a matter of which one are you going to go ahead and do.
Rainey, do you find that being a challenge? Because I know you go into the community and you're dealing with churches and things like that, and I know that you come across people that are underinsured. Is it a big challenge trying to get people to step up and say, "Hey, listen, man, you're gonna need this. This is what you need to do."
I'm not a financial planner. I don't do life, but I mean, I try and lead by an example. Here are some of the things that I did. Here are some of the sacrifices that I've made, and that's a big thing. Am I going to sacrifice? So, am I going to shop at Target or am I going to shop at Neiman's? You know, and I'm okay with Target. Target's got some great stuff. And I'm okay with getting clowned. Yes, this is from Target, this is from J.C. Penney's. I'm okay with that. My house, I owe 5 cents on my house. I haven't had a car payment since 2000, since before 2000. Hell, I think it was in the 1990s. So I mean, it's we have to, and this is more internal community. We've got to be less consumers, and definitely less consumers for other people, and more focusing on what's important for us and making that sacrifice and pushing things forward. I don't have any kids. Yeah, heck, I didn't have any kids when I bought my life insurance policies. And didn't have any kids, didn't have any thoughts of kids,
That's right.
but knew that hey, I'm young. Let me lock something in. Let me lock some universal life in. That's going to grow and blah 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 blah. And so I mean, I think internally within our community, we've got to be open to more education. We've got to be open to, now this is probably going to start going a different direction. We've got to open to being a lot more things that we are not a lot more things.
You know, that's a totally different subject, and maybe we can get you fellas back and talk about that. But with this community being $2.8 trillion of consumers, you
Mm-hmm.
know, we spend more than the country of Spain when it comes on consumer products. So, and one of the reasons why I believe that, our threats politically are watered down because none of our funds are going in any what I believe that that those political fights are happening because of that black dollar is not a threat to change anything politically at the moment. So I think that that's a whole different conversation that you bring forward, Randy, and that's something that I wish our churches and community leaders would talk more about. But don't get me started on that because that's a whole man. You're going to
Well,
see me get outrageous about it. Go ahead,
no,
Eric.
but Randy touched on a point, with regard to, that generational wealth, that legacy. We talk about sort of the fundamentals, the mindset of money. And what happens is, think about folks not having wills in place,
Hmm.
folks not having trust in place. And
Yeah.
culturally, what happens is we think we're going to go ahead and take some money to the grave with us instead of preparing the kids to go ahead and take over. Other cultures will go ahead and, at a certain age, let's say 55, start to funnel all their funds over to the kids, get it out of their names, and work the system. Us, no. So you can see somebody in $1 million house. Those rascals are sitting on Medicaid. Why? Because they funneled their money in an irrevocable trust. They funded it, and next thing you know, it's in the kid's name. The kids are managing those funds. They're leveraging Medicaid as the system. When we go ahead and we talk about long-term care and not paying a penny, where all of a sudden us don't make a quarter of the income, but we're holding on to it, so it shows that we have funds. And next thing you know, you want to get into a trust where that money isn't showing up, but guess what? It's a 5-year look back.
Yeah.
So if you didn't plan
Yeah.
out right, you
Yeah.
can't go ahead and leverage it.
Yeah. 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 Well, fellas, um, I really appreciate it. Again, let me introduce these guys. We're talking to Randy Phillip from the Washington Insurance Group. He's a principal agent. Also, Mother's Care Financial Group. Eric Jones. Fellas, I really, really appreciate you guys doing this for me tonight. And let's do it again sometime.
Anytime. God bless, fellas.
All right, y'all.
All right. Thank you.